Hello and welcome. You have tuned into World Business Report here on News 9 Live. I am Krishna Kumar. And we begin with a big story that we're tracking here on World Business Report, and that is Sam Altman-backed startup. ChatGPT creator OpenAI's Sam Altman's backed startup Humane is in talks with Indian telecom operators to launch its Humane AI PIN device. Humane's chairman and president Imran Chaudhry has stated, and I quote over here, "We are starting early conversations with Indian telcos and hoping to make announcements by the end of this year," unquote. Founded in 2017 by former Apple executives, Humane has raised around $200 million so far from backers such as Microsoft, Qualcomm Ventures, and OpenAI's Sam Altman himself. Now, the AI PIN costs $699 with a $24 monthly subscription for unlimited data and services. It recently inked a deal with the South Korean carrier SK Telecom for its first international market expansion. Now, this AI PIN device of Humane, which uses voice, gesture, and touch inputs, offers artificial intelligence services, including search, translation, and navigation. Meanwhile, Apple has surprised everyone by scrapping its decade-long electric car project in a move disclosed internally by COO Jeff Williams and Vice President Kevin Lynch on the 27th of February. Now, this project, known internally as Project Titan, began almost a decade ago amidst Silicon Valley's interest in self-driving vehicles. Now, the decision has left nearly 2,000 employees stunned, with some transitioning into Apple's artificial intelligence division. More details in this Reuters report. Take a look.
Apple has hit the brakes on its project to create an electric car. A source told Reuters Tuesday it's cancelling the work on the idea altogether. Bloomberg, which also reported the development, said employees working on Apple's EV will shift instead to a unit for AI. Apple declined to comment. The company launched Project Titan, as its car effort was known internally, a decade ago. That was when a wave of interest in self-driving vehicles swept through Silicon Valley. Reuters reported in 2020 that Apple was considering releasing a vehicle as soon as 2024 or 2025, but progress had been uneven even before the COVID-19 pandemic disrupted the global automotive industry. High interest rates have soured consumer sentiment, prompting automakers to cut jobs and production. Even EV market leader Tesla has been paring back its investments. Meanwhile, Apple has so far held back from any big moves in AI, in contrast to tech giants Alphabet and Microsoft, which have first-mover advantage in infusing the breakthrough tech into their products and tools.
Now, controversial Safer San Francisco proposal aims to introduce drones and surveillance tech for the use of San Francisco's police, and it's facing opposition due to privacy concerns. Critics argue that it grants excessive power to the police and undermines accountability, while privacy activists warn of biases and potential harm to marginalized communities.
Drones could soon be flying in San Francisco under the direct control of the city's police, along with other surveillance technology, if a controversial ballot measure is passed in March by its residents. The Safer San Francisco proposal, also known as Prop E, comes at a time when issues of drugs, homelessness, and crime have reached a flashpoint in the traditionally left-leaning city. And Mayor London Breed is betting that disgruntled citizens will vote for the proposal.
Well, I'm excited about drones because when you call 911, you want somebody right there. And drones give us the ability to get there faster than anything else so that we get eyes on the situation.
The measure would not only allow police to use security cameras and drones for video surveillance, it would also involve using facial recognition and AI. And that would mean overturning a 2019 ban in San Francisco on facial recognition surveillance technology by government agencies due to concerns then over privacy and misuse. That ban came amid a progressive drive for criminal justice reform during the Trump administration, including seeking alternatives to jail. But the city swung to a more pro-police stance during the pandemic. Speaking to Reuters, Mayor Breed played down any anxiety.
So I get that people are concerned about privacy rights and other things, and technology is all around us. San Francisco is the artificial intelligence capital of the world. I mean, we have the top 8 of the top 20 companies in the world right here in San Francisco. So it's coming whether we want it to or not.
The proposal's success is key for Breed. Elections are coming in November, and her approval ratings have plunged as the city struggles to bounce back from the COVID era. Proponents of the new measures say voters are ready to embrace more policing, with a recent poll showing 61% support. Breed says she is seeking to assure the city that the police will not abuse its authority. But critics have pointed out Prop E includes measures that actually cut police accountability. Matt Cagle, senior staff attorney at the American Civil Liberties Union of Northern California, accused the authorities of drawing from a well-worn playbook.
They're exploiting the legitimate fears that the community has about public safety issues, and they're using it to grab power and hand more unilateral authority to the police department. We think it's a really misguided approach. It's about politics and not public safety.
Privacy activists also argue studies have shown policing technology is often racially biased, invasive, or faulty. And some say they're worried it could lead to unintended consequences for already disadvantaged communities.
Now, taking things back to artificial intelligence, which has taken center stage at this year's Mobile World Congress that's taking place in Barcelona in Spain. You can take a look at all the latest that's happening in the world of artificial intelligence in this report.
Thank you.
From a tech frenzy in Spain to why Google needed a history lesson, this is Generation AI. Artificial intelligence has taken center stage at this year's Mobile World Congress in Spain. Gadgets featuring AI were all over the annual Tech Fest. That included a chatbot-powered robot, a phone camera that can create portraits, and a transparent laptop that can identify the objects behind it. NVIDIA hit another big milestone with its value topping $2 trillion, at least briefly. The latest surge comes after the AI chipmaker easily beat earnings forecasts and gave a bullish outlook for the months ahead. Google plans to relaunch its Gemini image generator. The tool was taken down after it created pictures with historical inaccuracies. Demi Hassabis is the head of the search giant's DeepMind unit.
And we care, of course, about historical accuracy, so we've taken that feature offline while we fix that, and we hope to have that back online in the next very short order, next couple of weeks.
Mark Zuckerberg has been touring Asia with AI top of the agenda. The Facebook boss traveled to South Korea for talks with the country's president and the heads of tech powerhouses, including LG. Earlier, he met Japan's prime minister to discuss AI issues. And OpenAI says the New York Times hacked its chatbot. It says the newspaper deliberately set out to create misleading evidence for its case against the ChatGPT maker. The Times accuses OpenAI of using its articles to train chatbots without permission. A lawyer for the paper says it simply used the bot to look for evidence.
Away from that to China. China's property crisis is worsening as the developer country Garden now faces a liquidation petition over a $205 million loan default. Despite vows to oppose the move, a court date has been set for the 17th of May. Now, this development adds to concerns over China's struggling property sector following giant Evergrande's recent liquidation order. With real estate constituting a huge portion of China's economy, the crisis poses challenges for China's economy as a whole and its government in Beijing. More details in this report.
China's property crisis has taken another turn for the worse. Giant developer Country Garden is the latest to face a liquidation petition. The firm revealed the news Wednesday. It said the petition was filed by creditors over non-payment of a loan worth $205 million. Country Garden says it will resolutely oppose the move, with a court date set for May 17th. But the petition will revive concern among homebuyers and investors over the country's ailing property sector. It comes just a month after bigger rival Evergrande was ordered to liquidate by a Hong Kong court. A string of other developers have also defaulted on their debt payments. The sector has lurched from one crisis to another since 2021, when regulators cracked down on the massive debts being piled up at property firms. Now it's all a growing headache for Beijing, with real estate accounting for around a quarter of China's economy. Country Garden says it will continue to work with creditors on a restructuring plan. In October, it missed a $15 million debt payment, prompting groups of bondholders to start organising action against the firm. One investor told Reuters the company had messed around and wasted time ever since, and said it was no surprise if some creditors had now run out of patience.
Away from China to the United States of America, which saw a major slowdown in streaming subscriber growth last year, while Netflix, Peacock and Paramount Plus drove the most growth with more than 240 million total subscriptions at the end of the year 2023. There could be signs that the boom might be over for the industry in the US. Here's more. Keeping it with the US, but shifting focus to Wall Street, where stocks closed lower as investors awaited key inflation data impacting expectations for a Fed interest rate cut. The Dow finished the last trading day of about 0.1%. The S&P is slipping 0.2%, and the Nasdaq falling about 0.5%. Stocks like United Healthcare and Bumble were plunging. More in this Reuters report.
Stocks closed lower on Wednesday, a day ahead of key inflation data that could heavily shape expectations for the timing of an interest rate cut from the Federal Reserve. The Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, is expected to show prices ticked 0.3% higher on a monthly basis in January. The Dow finished Wednesday off about 0.1%. The S&P 500 slipped 0.2%, and the Nasdaq fell about 0.5%. The down day occurred after a lengthy rally peaked last week on enthusiasm around the potential for artificial intelligence after NVIDIA reported quarterly earnings. Adam Phillips, managing director of investments at EP Wealth Advisors, said he thinks stocks are due for a pullback.
Over the short term, I would say we are still pretty cautious on the market. We are trying to remind our clients that the gains that we've seen since late October, more than 20% for the S&P 500, and really same thing for the equal weighted index if you just neutralize the impact of technology stocks, it's really represented more than a year's worth of gains.
Stocks on the move included United Healthcare, which lost 3%. It was the biggest drag on the Dow and one of the largest on the S&P 500 after a report on Tuesday said the U.S. Department of Justice had launched an antitrust investigation into the healthcare conglomerate. And dating app Bumble plunged 15%, trading near an all-time low after giving a weak first quarter outlook.
Amidst dating app Bumble's shares plunging to an unprecedented low on Wall Street, the downbeat quarterly revenue forecast highlighted the imperative for a revamp in the dating app experience to attract the newer generations seeking companionship. This report tells you all about it.
Shares of Bumble plunged as much as 11% to an all-time low Wednesday morning after the dating app gave a downbeat quarterly revenue forecast late Tuesday. It also said it would cut 30% of its workforce as new CEO Lidiane Jones moves to steer Bumble through sluggish user spending in an industry she said, quote, hasn't seen true innovation in several years. In an attempt to fix that, Bumble announced plans to relaunch its eponymous app and refresh the Premium Plus subscription offering. This comes weeks after Tinder owner Match Group also revealed it was updating its apps to appeal to Gen Z users and women after projecting January to March revenue below estimates. Analysts said these apps were in need of a makeover, but warned revenue growth this year could be slower than Bumble expects, as product improvements may take time to gain traction among users. At least 8 brokerages cut their price targets on the stock following the quarterly results.
Away from Bumble to bailed out German utility maker Uniper, which is anticipating a significant decline in profits as well for the year, attributing the downturn to lower wholesale energy prices. The outlook mirrors the normalization of wholesale power and gas prices following Europe's reduction in energy ties with Russia.
Uniper expects to see a big fall in profit this year. The German utility on Wednesday blamed lower wholesale energy prices for the outlook. The company has forecast adjusted net profit of between $758 million and $1.2 billion, well down from last year's record $4.8 billion. The outlook reflects a normalisation of wholesale power and gas prices, which rose sharply when Europe severed most energy ties with Russia. The update follows other leading energy firms, including EDF, in warning about lower profit this year. Uniper was rescued by the German government at the height of Europe's energy crisis 2 years ago. It needed a more than $14 billion bailout after Moscow stopped gas supplies via the Nord Stream pipeline. That forced the company to buy replacement volumes at sky-high prices. The German government owns more than 99% of Uniper. Sources last month said it was considering releasing an up to 30% stake in a listing next year. Investors were put off by Wednesday's update, and Uniper shares were down over 7%.
Luxury car maker Aston Martin's financial outlook experienced a remarkable turnaround as annual losses more than halved, driven by record-breaking sales, especially with the successful delivery of its Valkyrie models and exclusive editions as well. Take a look at this.
Aston Martin's annual losses more than halved last year. The British luxury car maker saw selling prices reach record levels. That as it delivered its Valkyrie models and other special edition cars. The automaker reported an adjusted pre-tax loss of $217.36 million for the year ended December 31st, better than analysts' forecast. While shares initially rose on Wednesday, gains were reversed to fall close to 3%. Investors were concerned about the carmaker's cash flow and volumes. Aston Martin had hoped to turn free cash flow positive in the fourth quarter of last year, but it was hit by the timing of deliveries of its DB12 and Valor models and now expects positive cash generation in the second half of this year. Aston Martin, which is fictional secret agent James Bond's car brand of choice, has had a tough time since its market debut in 2018. Executive Chairman Lawrence Stroll has tried to boost its cash and margins by rolling out next-generation sports cars. Looking ahead, Aston Martin kept its near and medium-term forecasts unchanged.
As global rice prices soar, a once cheap staple ingredient is now becoming increasingly unaffordable for many people in Indonesia. As the primary component of nearly every meal in the region, rice costs have surged to nearly 16-year highs, triggered by India, the world's leading supplier of rice, restricting exports due to tight supplies domestically last year. Take a look at this special report.
It used to be a cheap staple ingredient, but rice is getting ever more expensive, and that's a problem for many people in Asia. In this suburb of Indonesia's capital city, shoppers face long lines to secure subsidised supplies. One woman says there will be uproar if prices go any higher. Rice is the centre of nearly every meal here, but costs for the grain have jumped close to 16-year highs after India, the world's top supplier, restricted exports last year amid tight supplies. The El Niño weather phenomenon has also reduced rainfall across much of Asia, hitting output of cereals. That has sparked inflation for many foodstuffs, with rice up 16% over the past year. Indonesia's government has stepped in to help shoppers. At this state-subsidised market, rice sells for around a quarter less than normal. An official says that's a response to local demands, with people saying rice is increasingly expensive and hard to find. The market limits sales to 2 sacks per person to stop hoarding. Almost 430 such facilities were set up just in January, with another 300 or so planned by the end of February. Indonesia also looks set to import around record quantities of rice this year. While that may help with supplies, it could also drive prices yet higher. Asia's hard-pressed cooks could find that feeding their families is going to get even more expensive.
Away from all of that to the world of entertainment, where iconic clothes worn on screen by actors like Colin Firth, Madonna and Drew Barrymore were among over 60 film and television costumes that headed to auction blocks. The vintage treasures were part of a collection by Kerry Taylor Auctions, with each piece designed by award-winning costume designer John Bright. Take a look at this.
I think there are two items that we get more emails and phone calls about than anything else. The first one is the dress worn by Drew Barrymore in the Ever After film, A Cinderella Story. And any little girl who was growing up in the 1990s, I think it was made in about 1998, who's now getting married, has been emailing me saying they want to buy this dress. So I put quite a conservative estimate on that piece, but everyone wants it. The other piece that's caused a lot of interest is the Colin Firth wet shirt. So in 1995, BBC made Pride and Prejudice series, and Colin Firth is seen going into the lake and swimming and coming out in this wet Irish linen shirt. And it caused a sensation at the time. Next to me here is one of our star pieces. This is a beautiful Christian Dior original gown. This was worn with the coat by Madonna in Evita. We have one of the best French couturiers who designed it. We have one of the greatest performers of the 21st century, Madonna. And we have a great film, Evita. So the estimate on this piece is, it's my highest estimate, is £40,000 to £60,000.
And that's all we have time for. With that, it is a wrap on this edition of World Business Report. Thank you so much for watching. This is Krishna Kumar signing off.